Hey, what's up, my friend? So in today's video, it's all about the RSI indicator, right? I'll share with you 3 golden rules you can't ignore, especially if you trade the stock markets. Number 1, the 10-period RSI below 30. What's the significance of this, right? So let me explain. So when a 10-period RSI is below 30, it looks something like this. Let's say this is the 70 level. This is the 30 level of the RSI. RSI goes up, comes down, goes up, comes down, and it's below 30. This is where you want to look for buying opportunities, right, in the stock market, especially when a stock is trending higher. So let's say stock goes up, pulls back, goes up higher, pulls back, right? At this point, when the RSI is below 30, chances are the stock is making a pullback. And when the stock is making a pullback in an uptrend, this is where you can look for buying opportunities to go long. So a couple of ways to do it. Some quantitative traders will literally just look for 10-period RSI below 30 and then they have a limit order to buy the stock, just like that, right? Very pure quantitative trading approach. But for you, you might be a price action trader, so you don't want to trade kind of like without confirmation. So what else you can do is to look for a bullish reversal candlestick pattern like a hammer, right, to kind of like confirm that there are buyers stepping in before you look to get long. So that's one way you can use the 10-period RSI below 30 to kind of help you identify the area of value, right, in the stock market. Okay, so I'll give you an example. So this is the stock over here of Olin Corporation. Here the 10-period RSI is below 30, and you can see this pretty much nailed the lows of this pullback over here. Likewise over here, the 10-period RSI is below 30, pretty much caught near the low of the pullback before it rebound higher. And you can also not just trade individual stocks. If you want to trade, let's say, the stock market index like the S&P 500, it works as well, right? 10-period RSI below 30 over here and here as well. So of course, this is not the low of the pullback. It continued down lower before it rebounded up higher again. So one thing to note is that this is not foolproof, right? Doesn't mean a stock is the RSI is below 30, it will continue to bounce up higher for sure. No, right? There are times where it could continue to head down lower and then it would be a loss, right? So please, manage your expectations. This is not like the holy grail, the secret sauce, the 100% winning rate doesn't exist. So number 2, when the RSI is consistently above 70, that is a sign of strength. So many traders, they make the mistake, oh, Rayner, the RSI above 70, it's time to sell, right? It's overbought, it cannot go up any higher. No, right? It's a sign of strength. So here's why, right? Don't think that the stock will reverse just because RSI is above 70, because chances are it will continue higher. So let me give you an example. So if you look at this one, 40net, you can see over here, the RSI is above 70, right? You see this dotted line over here, this is the 70-period RSI, and it has been above it, right, consistently. And if you look at the stock price, it has gone up 98%, right, during the when the RSI is above 70 for a sustained period of time. So if you look over here, same thing, right? RSI is above 70, okay, and during that period, it went up 50%. So if you look at your stock chart, RSI is consistently above 70. The last thing you want to do is to short that stock. Bad idea, right? If you do not know what to do, at least stay out of the market. Or even better still, you know what to do, you can look for opportunities to get long, right, on that nice trending stock. But the last thing you want to do is to short that stock, because that's usually a bad idea. So remember, RSI above 70 consistently is usually a sign of strength. And finally, last one, RSI above 60. What does it mean, right? It's useful, right, if you want to capture a swing, right, in the stock market. So for example, let's say this is against your RSI, let's say this is 30 and let's say this is 60. So if the RSI value starts to cross above 60 over here, and if you want to capture a swing, this is a signal for you to capture a swing. So because the stock will look something like this, go up, come down, go up, and then it goes up. So when it make this surge up higher is when the RSI starts to cross above 60, and that's usually an exit signal that you can use to exit your trade. So an example over here, you can see over here, right, for this stock, right, Crocs, RSI here gotten above 60, right? So let's say, for example, you went long on this bullish reversal pattern at this swing low over here, right? Nice hammer looking, right? Then over here, the RSI crossed above 60, just nice, right? You can see that the market actually made this one swing up higher, that one swing. So this is where you can exit the trade, right, after the close of this green candle when the RSI is now above 60. So this lets you capture that one swing, right, in your trade. So a quick recap, right? Number 1, when a stock is in an uptrend, you can look for buying opportunities, right, when the RSI is above, or rather below 30. When the RSI is consistently above 70, that is a sign of strength. Please, right, don't mistake it as shorting opportunity, especially for the stock markets. And finally, if you want to capture a swing, you can look to sell when the RSI crosses back above 60. And by the way, if you are a stock trader or want to learn more about stock trading, you can join me from this upcoming webinar. Next one is in January. Don't worry if you're watching this video, it's already March, April, whatsoever, because I will update this page to the next webinar date. I intend to hold this webinar, once every month or so, once or twice a month, so you can join, right, even though you might be watching this video sometime later in the future. So during this webinar, we will talk about how you can actually beat the stock markets and generate an extra 10%, 20%, or even 40% a year without relying on chart patterns, studying fundamental news, or whatsoever. I'll even share with you a very simple trading strategy that has generated 2,421% over the last 21 years. I'll share with you, right, how to grow your account to 7 figures and beyond, even if you have a small starting capital. So all this and more, right, covered during this 2-hour webinar. It's live. So just put in your name over here and your email address, right? You can even put in your phone number. So before the webinar starts, right, I will drop you a notification so you know the webinar is about to start and you don't miss it. So with that said, I wish you good luck, good trading, right? I'll put the link somewhere below this video to sign up for this free webinar, and I will talk to you soon.